Let's start off with who's playing in this market at this stage, because foreigners still piling into Kenyan stocks, positive about the outlook for the local economy, it seems, and about the political climate as well, perceiving it as pretty steady at the moment.
Absolutely. The foreigners have been on the buy side of this market in the last 2 weeks, especially taking it off the 2011 lows. They're constituting between 65 to 70% of the turnover, and are very much seeing it as a cheap market after quite a sell-off in the first quarter. We were the poorest performing sub-Saharan African stock market. Valuations look good, and I think there is a sense that there is some political closure coming via this process that we're witnessing at the ICC.
Well, this kind of activity then, Aly-Khan, in the face of what kind of local participation? And I ask because while many of the stocks may be looking undervalued, sometimes valuation differs between the two groups. And if locals do view the market as undervalued at this stage, they would have to be piling in now to take advantage of that opportunity.
Absolutely, but do remember, I think the local investor base has been frazzled for a couple of years post the Safaricom IPO, where everybody got long and then subsequently were wrong. And I think there has been a huge move into the bond market, and the local investors still haven't come back in the way or shape or form that they were in the market in 2006 and 2007. And I think that's really going to require some an IPO pipeline priced with steep discounts to re-engineer and ignite that retail interest that we had here not so long ago.
Where that's possibly the catalyst that we're looking for, what kind of hints are you getting in terms of what we could be expecting in that pipeline and what actually would come to fruition?
Well, I think there's plenty in the pipeline, some of which I'm not at liberty to disclose. But I think what you're going to see is a two-tier IPO pipeline. You're going to see some companies look to come ahead of the elections, the likes of Britac and a couple of others, Trans-Century, which is an introduction by listing. But I think the real slew of new IPOs will come post-2012 and the election then.
Let's take a look at some of the companies that are currently listed and getting some attention. Safaricom finally starting to see some reprieve, up a further 1.2% in yesterday's session. It's traded heavy volume, and that helping push the overall index higher. This stock you've always been bullish about, Aly-Khan.
Well, I mean, it depends on the price. I'm bullish about it at this sort of level. I think it's very oversold. I think at a PE of just below 11, everything is in the price. I think it has so many retail shareholders that the moves tend to be elongated. We were in one of those elongated moves low, we're coming out of it, and I still think there's plenty of room to the upside of about 10 to 15% at least. The story of Safaricom is really going to be a story about data. They own at least 10% of the Kenyan population, are data users on Safaricom. And on that area, they're really showing everyone a clean pair of heels.
Okay, so we're looking at Safaricom. It's rallied close enough to 17% since closing at 3.60 shillings, which was a 52-week low on the 1st of March. It trades on a trailing PE, half that of East African breweries.
Yes.
Where would you be placing your bets at the moment? Because East African breweries seeing quite a bit of interest itself.
Well, that's the point. I'm glad you raised that. I mean, people are paying a premium for beer exposure compared to the information economy, and I think that is quite an egregious example of how wide that premium is. The point is, we've got this very bull outlook on the African beverage sector wherever you care to look. EABL is a part of that, and I think foreign investors are very comfortable holding consumer beverage type stocks on the continent. And I think it can go higher. It's been a very high beta share this year, EABL. We hit a new all-time high 6th of Jan at 227. We then plummeted to 162, and we bounced now back above 200 from that 162 level. But at these sort of prices, I don't think I want to be sort of playing it aggressively. I understand the dynamics behind it. I find it a little bit rich at this sort of level, especially because we've got much more restrictive drinking laws in its main domestic market here in Kenya. Yeah. And that data hasn't really fed through into any of the results I've seen so far.
Let's bring KCB into the fray here. We had that share price edge up 1% yesterday. It's still that low PE ratio, currently sitting at about 7.5 times compared with a sector average of 10.5 times. That seems to be the incentive here.
Absolutely. I think it's a very cheap share. If you look at the quarter-on-quarter sequence, it continues to accelerate from the first quarter last year. It's got a wonderful footprint across the region. They're beginning to fire on many more cylinders. And I think Martin Oduor-Otieno, the CEO, a little bit like Bob Collymore, is getting very much to grips with the cost base. And I think there's a lot of fat on the bone that's going to start to be chipped away this year, which will also be interesting for shareholders. I think you can go up to a P of about 11 or 12. I have a price target of 30. I think there's very low downside risk. And there's plenty of interest. The demand-supply dynamic has been 3 buyers for every 1 seller for more than 3 weeks, and I continue to see that being a positive signal for the price.
Let's put those blue chips aside for a moment, you know, some of those obvious plays, and look at the media section, because we've got Nation trading at 180, 183. That's been the range. It's reported strong full-year results. Standard is at 36 and Scan Group at 50. We are, of course, anticipating numbers out of Scan Group pretty soon. How are you viewing that space? Because as is the case with the banking sector, these media groups' performance are very much correlated to economic activity in the country.
Absolutely, and you know, advertising revenue, all the sort of media-related revenue lines have been showing good, strong growth, and we've had, you know, an upsurge in more and more multinationals coming into East Africa. They need to get their brand out. They're spending money, so. You know, Nation, Standard and Scan Group should be, and they are, riding quite a good wave here. Nation, very strong results, excellent media real estate, the most visited website, the most sold newspaper in Kenya, excellent franchise, and I think, you know, it looks good value here. The chart move is also very bullish. I see that going up to about 200 to 220. Standard Group, slightly different, interesting business as well, but the shares are all locked up. It's very illiquid, tends to move around in a very wide manner. It's a little bit difficult to make an investment case given the shareholder structure behind it, where you have a very solid majority owner. Scan Group, another interesting story. This is Bharat Thakra's advertising company, where WPP have, I think, a 26% stake. It's a pure consolidator play. They continue to consolidate in this region, looking to expand in Africa. I think they've had a great year because there's a lot of spending last year, but I think you're going to find this year their key spenders, who are Safaricom and Airtel, are probably going to trim their cloth. I think the full year results will be strong. I don't know how much I would be looking to push that share up from here. At 50, price earnings of, I think, about 30, it looks fairly priced.